Sir,
Hello. Hello and a warm welcome to all after the break for the second session of for today. I would also like to announce that the tax bill. So all are requested to visit the stall and take benefit. Now we have a second session that is a our third speaker for today is C.A. Darshan. C.A. Darshan Shah is a partner at and he's leading corporate tax advisory and business analytics. He has worked in the past with KPMG and vision of transforming 100 plus SMEs to. He has an active participation in the International Tax Committee of BCAS. He's a speaker on taxation subject invited by ST and associations. Pre-post budget analysis committee member. Also, his other areas of interest are I would like to welcome our today's third panelist, C.A. Darshan Shah. I would also like to call upon C.A. Mahesh Gavaria, our past convener. Thank you all. With this, I would like to introduce today's panel once again. We have with us C.A. Chandrasekhar Ji Tripule, C.A. Harish Ji Motiwala, and C.A. Darshan Ji Shah. The moderators for today's session is C.A. on their mobile phones as well. For your convenience, the case studies are also being displayed on the screen. With this, I would like to hand over the dais to C.A.
Tax section 4480 is on the statute for more than 36 years by now, and we have always a new challenges every time with a change in legislation, and the interpretation always leads to a lot of new things. We have galaxy of speakers. We have heard in the morning our Central Council member Sri Chidleji, and he has enlightened us on revised guidance note. We have combined certain issues which are related, we are facing in day-to-day practice, and we will take advantage of galaxy of speakers, Sri Chidleji, Harish sir, and Darshan ji. We have combined the issues more. Initially, we take up the issue on new clauses 30C and clause 44, and then we try to dwell on the other issues. We request members to park their own questions at later point of time. Initially, let us complete the case studies which we have compiled, and time permits, we'll take up the other issues. To start with, we'll take the first case study number 5, which is we are to request us to enlighten us. This is a study related to clause 30C, that is impermissible arrangement. The case study, as you, I just narrate you for the everybody's knowledge. A Limited holding company and B Limited is a subsidiary company. A Limited transfers shares of B Limited through exchange, paying STT, making it eligible to claim the lower tax rate benefit. Here, the issue is whether major asset of B of 25 acres, whether by the transfer of shares is on stock exchange on STT paid. The issue arises the land value of the 25 acres is substantially higher than the shares value at which it is being transferred. Whether such arrangement can be considered as an impermissible arrangement under 30C and auditor is required to report it. I request Harish sir to analyze this.
Defined under section 96. 96 of that. An impermissible avoidance arrangement means and it creates a right or obligation that directly or indirectly in the misuse or abuse of the provision of that. Next, commercial substance or deemed lack of commercial substance and entered into or carried on by means of or in a manner which is not ordinarily employed by bona fide firm. So now here the question is A Limited and B Limited, both are related concerns because A Limited is now here the question is that it is transfer shares paying STD, that is at the market value of the share, and transfer land from transfer shares to B Limited and A Limited. Now, from the problem, it is not clear whether transfer the land at the market value or at the cost. Even if it is transferred at cost, can you say it is impermissible transaction? As Chintle said, that it is a cannot decide, he has to refer to the principle. If they don't agree, it has to refer to the approving committee. He will decide the impermissible transaction. Here the point is, and guidance note also very clearly said that we should not write impermissible transaction unless it is decided by the approving authority earlier. Only those transactions to report as impermissible. Otherwise, you cannot say it is impermissible because it is allowed under the law. Suppose you claim deduction, whatever under section 80 and chapter 6A, or any deduction under section 10A, and you say it is impermissible, it is allowed under law. And therefore, it cannot be said impermissible. Even here, land is transferred at book value, and shares is transferred at the market value. It is not. Actually, it is for the assessing officer to find out what is the capital gain avoided, and not it is. We are not assessing officer. We have to report, but it is a permissible transaction under the law. So according to me, there is my question is not correct.
Just to give you the perspective of the question which we have raised.
Yeah.
Question is, B Limited is the owner of the land, 25-acre land, yes, which has a say approximate market value of 200 crore.
Okay.
Which is a listed entity.
Yes.
A Limited acquires the shares on the stock exchange at the say price of prevailing market rate of say 50 crore.
No. A Limited transfers shares to B Limited. Yes. It doesn't acquire. And B Limited transfer land to A Limited. That is the point. Yes.
I think there is direct transfer of land.
Okay, purchasing the share. Okay, okay.
Transfer of land by purchasing the shares.
Okay,
So
okay.
where land value is much higher than shares value.
Yeah.
Then it will come out to impermissible.
No, I think there is one more point which is attached to it. This whereas when land is getting transferred, land shareholder, the rate is going to be 10%. Can the department come and say,
No, but it is illegal.
can you do much higher for land than for
Now, in the case of the cooperative society, you transfer the share. The point is here, yes, you pay for the shares, but you don't for the buy shares. Yeah, because you pay for the flat also. And then you get the flat transfer, then shares transfer. So here also, even and you say land is at 200, then also can you say it is impermissible transaction? Assessing officer to decide. I request the chief to clarify this.
see if you consider impermissible, there is one then there can be an allegation of abuse of law. It was explained that taxes at a fairly lower rate, stamp duty is avoided. But then, as you have said that okay, in case of listed, the market decides what is the underlying value, and then in this case, it is appropriate. Computers, etc. There is copy paste mechanism, and people. So one person was throwing a party, and he sent message to the president of that club that please join for this party at this venue, etc. Then he realized that he is not having same numbers of all the members. So he told the president, please send it to all. So this answer, I believe, restrict the agreement that if it is unlisted company, in that case,
Then there will be yes.
because there is a valuation mechanism given that property or jewelry, then you have to consider the underlying value, and if that value is more, then that is brought to tax. So that value is already expressly brought to tax. But then it is different.
No, but it is restricted way, it is a market value.
Then exactly, in Calcutta, if they come to the conclusion that yes, it was.
Thank you, sir.
Septembe, you want to say anything? Yeah, yeah, please.
So I think the point over here which was supposed when E limited. Okay. So if we go to the hits, A limited is the holding. The shares of B limited are getting transferred where the underlying asset. Suppose that's generally a usual transaction. Now we have two options. Option A is now let's say the major asset
consideration which are going to be received, let's say if the land and building is getting transferred, then the consideration is going to belong to the transferring the shares of the company. Therefore, now at the end of the day, by this arrangement, what is happening is if at 20%. And if shares are getting transferred, then it will be taxed at 10%. So there's a tax benefit because of this transaction. Whether this transaction will be qualified to be an impermissible transaction, because then what needs to be looked into is so with this particular understanding, it is now there is Supreme Court decisions. Now here, because we are talking about, therefore the question can arise, and therefore the purpose of transferring it by way of transfer of shares was to reduce the tax benefit, to reduce, and therefore this arrangement whether can be qualified into the GAR provision. Now, if we are able to prove that the main purpose of the transaction was not only A, and B, this is not the misuse of the, and therefore we did this transaction. And however, the department may come back and argue that yes, this is an whether that argument is which can be given.
And the only point. There could be thousands of reasons. And the market is always eventually what is the fair market. And even if it is a private limited, forget about this, it is a public limited in the question. But even if it is a private limited, if I get the valuation done from the register, and not the land, no doubt substance it is the land. But what is that? It is a shares I have transferred, right? And the question nature is 20%, 10%. But that does not mean that it is important. Whether it is 10% or 20%, that is a different thing. But it is not important.
Thank you, sir. Let's move to the second question. It is the case study number 6, which is related to clause number 44. Reporting of total expenditure under GS for the GS as per the GST. The reporting requirement is onerous, and sir, it requires clarification once again from you. You have clarified in the morning, but just for the benefit and for understanding more clearly, whether breakup of total expenditure is required to be given or can be restricted to revenue and capital expenditure. Here we need to say that whether we need to report each and every expenditure, head of expenditure while reporting it in the tax audit report, or we should report total amount of revenue expenditure and total amount of capital expenditure incurred, and to revenue expenditure, whether we should include non-cash expenditure like depreciation, provisions, which has no GST implication per se. And as in reporting bad debts and other expenditure, which doesn't have any implication like employee salary and all. So while reporting in total expenditure, whether we should report all the expenditure of P&L and just give the breakup of GST registered, composition and non-registered. And here also one more question arises. Lot of entities will not have a data easily available. In that case, how to report in this case? We request you to answer.
Yeah, all of us have faced CA examination. And we said that one who fails in November examination, there is will, there is way. After November, there is me. For me, May came very fast. So, as far as this question number is concerned, that is concerning analysis of expenditure. Then we have a table with four main columns: serial number, expenditure incurred, accepting expenditure at all places. The word entity has been used. The form and the law knows the word person. The entity word is not defined either in this law or GST law. So we have to take meaning that entity means a business entity, because at least in service tax, business entity was defined. Now, this adjective entity is not applicable when we are reading column number 2, expenditure. So, as far as expenditure is concerned, you have to take then when it comes to analysis would be out of that expenditure, what results into payment to registered entities. So, besides this, under expenditure column, certain other items would appear, like this write-off of bad debts, write-off of depreciation, amortization of out of immobility. So this is not resulting into payment to any entity. So view has been taken in the guidance note that these types of expenses need not be. Secondly, there are certain payments made to the person who are not or in the occupation, vocation, etc., like employees, workers. They are employed in a company. So that also does not result into payment to the entity. So that need not be classified. And the remaining expenditure which results into payment to entity or registered entity or unregistered entity also needs to be classified. Here, whether you should report headwise, you should report total expenditure in profit and loss statement, total expenditure in balance sheet. The form is silent and there is no commentary available from CBDT. So choice is left to the auditor to view in his own perspective whatever is more convenient. Supposing only in one line it is stated, including all expenditure, capital as well as revenue, it is debited to P&L, debited to balance sheet, and then it is analyzed, he would be in compliance with the mandate of this clause. In guidance note, we have stated that it would be better that if expenditure reported in profit and loss statement is analyzed in one line and capital expenditure is analyzed in other line, so that for an assessing officer, maybe if there is ease in reconciliation, or if one feels that although it is not written in guidance note that each and every head of expenditure should be bifurcated, I think that also is in compliance with the requirement of this particular clause. So whatever you feel appropriate, you have to report, but only thing is that the entire expenditure has to be analyzed, not merely revenue. This revenue as well as capital. With this background, I think whatever questions are depreciation, like salary, cannot be classified into payable to the entity or otherwise. But last two, ad hoc provision for expense. Here, and this is an ad hoc provision. If it is actual provision, then in that case, certainly it will be classified because these are business entities. But it is an ad hoc provision that maybe at a later date, this may classify for the purpose of payment. So here this need not be classified because you don't know the entity to whom the payment is. So just ad hoc expenditure is there or ad hoc provision classified in form 3CA or 3CB. That ad hoc provisions has, although it is expenditure, it has not been classified. And as you will appreciate that in income computation also, in all probability, that ad hoc provision might have been added back. And in case of doctor or advocate who is not liable for GST, whether in his case also this clause is mandatory. The answer is yes, because the title of this clause itself says that analysis of expenditure incurred by the registered under the GST or not. So doctor is may not be registered under GST, but still clause is applicable in case of a doctor. In this case, supposing assessee gives some analysis and you find it difficult for want of the ready availability of appropriate data, maybe you can include those figures in clause 44. And appropriate reservation can be put in form 3CA, 3CB, that in what manner you have dealt with those figures, whether you vouch for those figures or whether for want of this data or ready availability of analysis, you have not verified it or you have verified it with test check. So that you can exclude your responsibility based on the facts and circumstances of the case. So that is as far as clause 44 is concerned. One more aspect which was I was asked about the format of financial statement in case of non-corporate entities and limited liability partnership. Accounting Standards Board has issued format for it is recommendatory in nature because it is believed by the board that with the passage of time, people may embrace or all the stakeholders would find it easy interpreting because everybody is presenting in a similar manner. If in a different fashion financial statements are presented, then maybe layman may not be able to appreciate it. And for banker also it would be easier. This is the initial phase. So in initial phase, this format, or you may not opt for this format. You may have figures for this year and previous year, current and previous year, or you may furnish figures only for current year because income tax law or any other law does not mandate for non-corporate entities LLP to have figures for earlier period. So you can continue to follow whatever you want. It is advised by this board that sooner it is made mandatory, it is better. So this is as far as the formats are concerned. As far as LLPs are concerned, it is under active consideration of MCA to have format for financial statements and accounting standards for the purpose of LLPs.
Thank you, sir. Members, if anybody has any question on clause 44, we can at least make use of the.
To what extent is the
Pardon?
To what extent is the responsibility of the auditor as
Chief
far as clause
Justice.
41 is concerned?
Yeah. Chief Justice, one of the member has a question on clause 44.
Can you please get up and
Yeah. To what extent is
You are certifying particulars in form 44 as correct.
True and correct.
So to an extent you believe that it is obligatory, it is not correct. You have to express yourself in form 3C or 3C.
And on a practical aspects, all are saying that comments. SSC says that no, we would like to provide you the figures.
Assessing?
SSC says that we would like to provide you the data. Now there is a column. But you have correctly said that doctors have all are covered. Particulars total amount of expenditure incurred during the from the one except the opening stock purchase and all 1 to Z, A to Z. Now in a purchase, there are around 10,000 transactions out there. It will be easy under GST to get bifurcated of that registered, unregistered, whatever. There is a sixth column, fifth column, total payment to registered entity. In this, I have a 1200 parties of purchase. How one can ascertain the payment made to registered entity? Now let's take one example. One party more than 1 crore. Transaction of 1 crore. Part payment, on account payment, bill wise payment. Now your purchase reflects only of the payment made to register. You can all expenses.
So request to keep the question as clear as possible. Yes.
I'm talking on the fifth item of that. You have to go individually. My point of view. It's a damn difficult subject.
Yeah, so you're talking about practical difficulty in
Practical
comparison of
difficulties. We are here discussing your question, answer,
Yes.
and our question and
Yes,
answer.
I agree.
I'm just highlighting those who want to even read. The damn difficult part of calculating 1200 creditors under one item. How much payment made? Payment, it is says that total payment made to.
No, I appreciate. As far as this word payment is concerned, it is like of expenses incurred. It is not actual payment.
Actual payment.
It is expenditure
distinction
incurred during
is-
the year, which is appearing in profit and loss statement, or
Whether paid, not paid.
Yes.
whether expenditure appearing in profit and loss statement and balance sheet.
That column is separate. Expenditure is first column.
No,
Here there is a word payment. There is no expenditure.
That expenditure is
Sir.
and whenever there is voluminous data, technique of test check, but let me go forward and say this is the era of. So you are asking about one aspect. We are already answering payment exceeding 10,000 rupees, otherwise then by account pay check or not, and there may be 1 crore transaction. So even if humanly they are verified, we are analyzed or not. So this is the era that you have to use audit tools. Once when you use, they would maybe whatever you think you have to do within 5 days, 50 days, maybe within 5 minutes the answers are available. So one should be used to those audit tools, even institute acquiring audit tools and giving it to the members. But privately also audit tools are available. So for this, one can employ audit tools and maybe he would find keys in analyzing the expenditure.
Sir.
But I think the answer has to be given. It is not that this question is not very mandatory. It is in a given situation, you can qualify your response and form 3C or 3C.
So when you're talking about total expenditure, you said that depreciation or that test shall not be taken into account. But that is in regard to bifurcation or even in total. Those depreciation are in the total expenditure.
Clause 44 is concerned. Clause 44 is nobody asking you. So in column 3 with column total of 5. Not classified, and again expenditure, it will be total expenditure. And this payment will be only to the entity. So we are saying you put entirely the expenditure and exclude in analysis this allowances and
Can you mention separately that I have excluded this amount?
that is also possible. So that will more clarify.
Similar question, sir. Suppose total expenditure is 10 lakhs, then I will just claim.
Then you are not interpreting the word expenditure. They are asking what is the total expenditure. Sorry? Total expenditure is 10 lakh, for example. I forget it into register or register. In agreement.
This particular clause is
Expenditure incurred by the entity whether registered. So salary is also expenditure. It is not that
is the total expenditure, 3 lakhs is depreciation, mandates, etc. Then you analyze 7 lakhs only. Because we are saying that is not relevant here. That was clarified yesterday in the indirect tax webinar.
the tax subject is qualified by the fact. So that will be the answer of that person. Guidance, different answer, and everybody may. Then you should put your their expenditure is to be considered. Okay. Including capital expenditure.
Including it, you have to give two bifurcation: revenue and capital. Thank you, sir. So let's move to next question. It's a question number 8 for Jitle sir, because Jitle sir has requested he has to leave for some other Pune early. So I'm just taking his question first from other seminar. Question number 8 is related to virtual digital asset. From 1st July 2020, clause case study number 8. Case study number 8. Case study number 8. This is related to carry forward of losses on virtual digital asset. As we are aware that there is amendment in law from 2020 to 1st July 2022 that losses incurred on cryptocurrency, virtual digital asset, and is not allowed to be carried forward. The issue is open that whether losses incurred up to March 22, how it is to be treated. So we seek a guidance from Jitle sir on the subject. If the assessee has a carry forward losses on virtual digital asset up to assessment year 22-23, how it is to be reported?
21-20.
Yeah. Yes. Account financial year 21.
Yeah, this new law is per transaction. That in one transaction you have incurred loss of one profit of 2 lakh rupees. So both will be dealt with separately. For the purpose of ascertainment of income or loss, only expenditure like that asset would be deductible. And in case of profit and loss, even against single transaction, these will not be set off. So if in a transaction you have sustained loss of 1 lakh rupees and another transaction of income will include only profit of 2 lakh rupees and not after set off of this loss, because loss is law which is contained in 115 So whatever law we just now discussed, and again there is embargo to carry forward the loss. Supposing you have sustained loss of 10 lakh rupees, not only it is not deductible, but also it can carry forward to subsequent period. So this particular law is applicable only yes 23-24, and if there is any such transaction, supposing during the yes made profit in one transaction, loss in another transaction 8 lakh rupees. So there the normal provisions will attract, and there the aggregate income will be loss of 3 lakh rupees. So in this background, it says that for assessment year 2021, there is aggregate profit and aggregate 115 PBH was not applicable. Then 21-22 again this will be reported as a loss if it is set off against any other income. Set off. If it is not set off, it will set off in subsequent period depending upon. As far as assessment year 22-23, there is income 50,000. 6-2022, and there is again this loss of 50,000. So this is again assessment year 22-23 up to 2020. I don't see any significance as far as answer is concerned. So this loss of 50,000 also can be reported at subsequent period. But if we take this as a financial year 22-23, in that case, the income will be 50,000 rupees. This loss will not be considered. Tax will have to be paid in assessment year 23-24.
As we have completed case studies on clause 44 and 30C and that new subject of virtual digital asset, we'll take up the case study from case study number 1 onwards. And I request my co-moderator Atul Bhai to take up the case study number 1. We request Mr. to remain with us as long as he's available, please he can spare a time with us.
Now start from case study number 1. I request Roshad Bhai to take from this case study number 1, that is clause 34A and 21B. Is relating to proviso to section 40A1A, report only the amount of TDS needs to be deducted. So a company has to pay 4 crores professional fees.
Before this, the direct tax committee has also published a book on taxation of virtual digital asset, which is available on the website. So that also you can consider, and this particular issue has been dealt with in that booklet.
So a company has to pay rupees 4 crores and deposited to government. As regards to the court deductive, since the amount of tax along with the interest was deposited by the certificate was also issued to the deductor, a company was not in default. While reporting under clause 34A of the tax audit report a company reported TDS deductible and TDS deducted with the result into reporting of the short deduction of TDS. Please throw light as to whether there is a default or not a default and what is to be reported.
Right. So let's go on to reporting. So first understanding, say that let's say for example, I am a deductor and supposed to be paid. So I paid to different. Now, if you go to 34A, what 34A is total expenditure on which tax is supposed to be deducted, and expenditure on which tax is deducted. Right? That's what the column says. Now, when we refer to the second column, which talks about tax deducted, okay, the question is whether I should report 100. Talks about tax deductible, whether deducted or not. If short deducted the details, therefore, now there is no privilege available. How do I reflect or how do I disclose that transaction? That is a question. Now, currently, if we see the structure of the tax, possible for us to make for that. Okay, so the order, ideally, because he has already given me a itself is 80 and not 100. So I will reflect 80. Disclose that, and that can be a, according to me, it should be reported. Supposed to deduct on 80. I have deducted on 80, which I will report in third column, and that's how I will proceed. There's no system error later on which will throw a notice on me. That's what I would like to ask.
I was required to deduct on 100 rupees. Can I pass my liability to somebody else? Is it permissible?
I think here what is important is I have received a certificate which shows that the opposite party have deposited the tax. So because he has already deposited the tax, based on the
Certificate is not Form 16 or 16. No. Only you are given this. That he has paid the tax. Transfer no. That is the only important question.
So, see, as far as deduction is concerned, if there is failure to deduct tax or to make payment of tax, then there is disallowance. But assessee is not considered to be default if the deductee has made payment of his tax, has paid appropriate tax and he gives certificate to that effect, the assessee, then disallowance does not attract. Now, here, if considering this question in the perspective of disallowance, the disallowance will not attract with such a certificate. If we are considering this question with reference to tax audit report, by the time you conclude tax audit report, that certificate cannot be issued because that party might not have furnished the return of income. If that party has furnished return of income and given certificate, different is. If they have not furnished return of income, certificate cannot be issued, and in that case, it will have to be reported in this particular tax audit.
Absolutely. So that is true, Jitesh. So basically, the fact. So let's say when the certificate is now received to deduct the tax.
No, that is understood because that only point is whether deductor was liable or not. Deductor could be held responsible if tax is not deducted, then he has to pay the tax with the interest as well as here's the certificate. it is section 191, as well as the first word of section 4 and second word of 201. It clearly 3 times, I mean, clarified in that once deductee had deducted the tax. Here, as Stevie said that certificate is received before the tax audit is finalized, you are absorbed from the land.
Yes, one question.
Only
So more importantly, the point over here, what I short deduction reflection as far the report is concerned. To avoid that, we can have this mechanism. Now, since I have received the certificate as an auditor, I have a document. On the 20th.
One.
So didn't they provide it?
That is available. So sir, that is available in the report. So the report is
show his income or to pay the tax, because the deductee has got losses and there is no tax liability on the deductee. What is the consequence? Does it say he has to pay the tax with income or he has to declare that income in the return? We can't go by. One possibility is that he will declare that income, but there is no tax liability because he has got losses. No. So what are the implications that?
but how is that that is the issue the certificate?
So certain issues for payment of tax or showing an income.
No, I think it is for the payment of tax. Because what is happening?
see, as far as the person system that he has included this income is his profit and loss, and he has paid taxes as per law. Now, for loss there is zero tax, so he can issue that certificate.
It is reflected to the chartered accountant and chartered certify that transaction, then you can take.
My question is both. Is it vis-a-vis tax or
Both.
both?
I think it is both, but what happens is you are disclosing the income, the party is disclosing the income, but as a virtue of the. Because it, yeah, that's it.
Tax in terms of law.
So it comes in.
Thank you.
As security says, that by the time the return will be filed later on, then practically the certificate will not be available when you are conducting the tax audit.
Yeah.
So then we have
Then
to
you have to
report.
write 100.
Then we have to write 100.
Because then you
Here,
will have to
good.
report 100. Then at that point of time, he was in due. Receive the certificate, you are out of that obligation.
Thank you.
No, only supposing if even if 100 rupees, and then you are confident that you will be able to get certificate from the RCC, you need not include that you can take. Reverse tax audit report as per law, it can be filed only if the payment under section 43B are made issuing tax audit report. That is the only situation which the law takes into account for the purpose of issuing revised tax audit report, not otherwise.
Let's move to the case study number 2. Second case study is for the Harish sir. The case study is related to the stock statement, and it is related to the stock amount reported as per the internal MIS given to the management and bank, the stock statement which is submitted to the bank. So if there is a discrepancy in the internal stock reported in MIS to the management and the stock value recorded in books of account, and which is reported to the bank. So whether any responsibility of the auditor to point out the issue in the audit report.
Here the question is, should I go as per question wise or what do I do?
Yeah, please.
Yeah. According to me, no. And books of account does not include the bank. So your stock should tally with the bank. Then there is no question. Even there is a decision, and that is in the Ramakrishna Mills Limited, 93 ITR Madras, wherein it is said that if it is, you cannot tally, then it could be rejected. But if you can tally, there is no question. And it is another decision also, CIT versus Atul. To Swadeshi Cotton Mills Limited. In Swadeshi Cotton Mill, it was not accepted because he could not explain why there was. Forget about the value also. And therefore it was rejected. But in that first case, Ramakrishnan quantity was explained, and therefore the that doesn't matter. That whatever you have taken, I mean, given back for the water.
Sure, now in Schedule 3, new requirement conciliation is required to be given. So if that is a private limited company or limited company, whether your answer would differ in this new requirement.
Here also.
Also requires to be
Yes,
reported.
yes, yes.
The question is as per the books of accounts, you should. And whatever, suppose you can't, I mean, wrong statement to the bank or to the stock, then you have to report that it is as per the Caro.
Only as far as Caro is concerned, where you is stating that whatever is a market value or level just to meet our DP requirements and what
In the valuation. Otherwise, in the case of manufacturing company, which is stock is necessary, and it is necessary to maintain the stock register, in that case, quantity should there. 1 minute. CV secretary is going to.
I, on behalf of JB Nagar Study Circle and on behalf of all of us, I propose a very hearty vote of thanks. Thank you, sir. Thank you for your presence. Thank you for enlightening us and sharing your views.
Thank you.
Thank you.
This question was also asked by one of the tax officer to a chartered accountant in the course of this search. So after being searched, when a chartered accountant was a consultant was called for, and he was asked this particular question that why have you not because during the course of search there were a lot of information which was identified, and it was also that as a course of communication, information were already shared with the chartered accountants team to the auditor, saying that why have you not verified it when you auditor when he is reviewing the audit, whether he is obliged to do this particular. So as Harish also said, that because Caro has a specific requirement to do it, therefore we do that. It refers to the financial statements. When we look through the accounts, right? So it does not refer statements are there. Banks stock statements are there. It refers clearly about books of account and
Question number 3.
Sir, request you to keep question number 3 and 4. It's a little lengthy and it will take a lot of time.
Okay.
So let's move to question number 9. Yeah. It is Harish, sir.
Question number 7 is also, I think, we will skip for the moment. So we'll go to question number 9.
Now here, situation is that an SSE is carrying on the business as well as the profession. And he is carrying on selling books and profession of training the students or whatever. Now here point is that his professional total turnover is 40 lakhs and business turnover is 70 lakhs. So in this case, whether he is liable get the tax part. Now, if you see 44A, 44 AB, A says that if you are carrying on in a business, if any person carrying on the business and his turnover should exceed 1 crore or 10 crore, whatever may be, or profession wherein his turnover or exceeds 50 lakh. Now there is a question is or, and that or decides between A and B. So the both cases you should have taxable turnover. Now here the question is profession is 40 lakhs. Otherwise, what is the limit? 50 lakhs. So here it is not covered under B also. Even business it is 70 lakhs and not 1 crore. So it is not covered. So according to me, in both it is not covered in the first case. Whether audit is applicable if turnover is 1 crore, more than 1 crore. Here, because you are talking about this, I mean sequence, yes, right? Yes. 40 and 70. Because if it exceeds 1 crore, according to me, no, because be taken into account. You have to take turnover of the business separately. You have to take the turnover of profession separately. So therefore, here audit is not applicable. Right. Next question is book selling is more than 1 crore, 1.1 crore. Naturally, tax audit is, then there will be audit applicable to both profession and business. No, it is applicable to the business because it is relating to the business. Right? So business, if there are carrying on the business of 4 businesses are there, then it would be applicable to all businesses. But here, profession is below taxable, yeah, and therefore it is not taxable. It is only a business which we get audited. Combine you cannot. The question is because it is the question is or. Then it is naturally if you have you are proprietor because you are a person. The word is person and person is defined under section 231, which says individual employer for whatever may be. Suppose you are carrying on the 4 businesses. For 4 businesses. But in one business it exceeds 1 crore. Then it is applicable to all the businesses. If you maintain no separate account but only one balance sheet or profit.
But professional income also is subject to.
Professional, no. One books of account say.
Let's show professional income also and
yeah, so you have it is bifurcated that this is my professional income, this is my business income. Can see question is generally combination. Then the question is total receipt would be considered. Now here the question is, hello, please listen, please. Now you are saying that it is a one combined profession and the business, and you don't keep separate account. Then what is the total receipt? If total receipt is more than 1 crore, then it will be applicable. The question is on the basis of the facts, not every year. But if you maintain the same books of account, then your gross receipt would be naturally more than 1 crore. Now you can't say this is a business or profession. So difficult होएगा एक बुक रखोगे. It depends on the facts again.
So I think what he rightly said is that if it's a total receipt.
Yes. One question.
Yeah.
Then only 1 crore is available.
Yeah. If it is receipt or expenditure, 5% of receipt or expenditure, right? So if it is the receipt is cash,
Then it's 1 crore, so subject. Plan.
yeah. Otherwise 10 crore. Otherwise 10 crore.
More than 1 crore. Cash is the time avoided. One is 45 lakhs professional income and one is any figure above 1 crore. Let's say hypothetically 1 crore itself. So total revenue, gross revenue 1 crore 45. Now as per your suggestion, tax audit is not supposed to be done because cash receipts are not like more than 5%.
No. I say if it is 1 crore, if your business is 1 crore or more, then that tax audit is applicable.
Yes,
Because
fine.
yeah, that is my
That is
answer
fine.
was-
That is fine. I got it.
Yeah.
I got it. Now,
Yes.
when I am preparing the return of income,
Yes.
in return of income, in the data entry, I have to make a choice that subject to tax audit, I am putting yes. There I will be putting the figures of 1 crore, nothing relating to 45 lakhs my professional income. There will be the mismatch of trading loss account like that. And when you say that you want to make an XML utility to enable you to file the income tax return, there will be mismatch of balance sheet, mismatch of profit and loss account. And this is the practical difficulty because your revenue is 1 crore 5 lakhs and you are reporting only 1 crore of tax. This is a ground reality. So how we can sort out, because this is subject to tax audit. You are not giving any information with respect to tax audit, only limited information. But your turnover and your profit are varying because you are reporting only 1 crore income. And let's say expenditure 70 lakhs. So 30 lakhs rupees business income. And out of 45 lakhs, 15 lakhs expenditure, 30 lakhs is a profit.
That is okay.
I think
That will,
I think there can be many such
so
discrepancies.
according to me, I cannot my XML utility of the return.
See, we in morning also we talked about schema given by the CBDT or police. So there can be many such things where it would be practically difficult. But what we are right now discussing, is what is the law. And I recollect that in the first publication of BCA about tax audit, where Mr. Palkiwala was asked this particular question, he had also opened the same thing. If there are two things, then you did not. But anyway, I think it is very difficult to reply your question when there is no bifurcation is given. So let us go to next question, please.
Related to this, sir, I have just one or two questions. For applicability of tax audit provision, when this profession is conducted in a LLP form or a company form, corporate form, So whether we should take up the limit of 50 lakhs or we should, because it's a business, because it's a company, it's a business.
No, LLP could be a profession.
Profession.
Yeah, in case of a company,
Yeah, okay.
company.
Ah.
So whether we should consider a limit of 50 lakhs or we should consider a limit of 1 crore.
It is not necessary that company can carry on the business. Company can carry on the profession.
Technical consent, yeah.
So they are carrying on the profession. And
Development of this.
it is a business.
There's information technology specifically covered in specified professions.
Software, according to me, is a business. Carrying on the software is a business. And not, I mean, this is my view. I may be subject to correction. But yes.
And then practically in lot of cases, it happens that assessees tax is deducted under 194J, even though they are not a professional. So in that case,
it is. I mean, there are case laws also that the tax was deductible under 194C, but the client is deducted under 194J. And the assessing officer has raised the demand.
yes.
Naturally, appeal you have to go, and there are many legal decisions available. Any questions on this?
And one last question related to this limit is the partners receiving interest and remuneration. If interest and remuneration is say above 1 crore, whether they should be subject to tax audit?
According to me, no. Because who carries on the profession, firm or individual? If firm is carrying on, and is a salary, no doubt you show as a business income under the return, but tax audit is not necessary. Now there is a decision available, and it is mentioned in the guidance note also. Yeah, no, this decision is. Perizad Zorabin Irani, Bombay Tribunal, Bombay High Court, Bombay High Court, which is mentioned in our guidance note also, that salary is not taxable, I mean, considered as a further tax audit.
And sir, suppose if that is considered for tax audit, then interesting question would be whether that person can claim, 8%, 50%, 44 ADA also. So previously department used to do this. Probably first case law was PwC partner of Calcutta High Court, where 271 1C penalty was levied, not 1C, but this for not doing. But now department will not accept this because otherwise offer only 50%. So department would not be able to.
Now there is the Bombay High Court decision.
Yeah, you can't directly do that. Because even if you do 50, but if actually your income is more, you are supposed to disclose.
Anyway, that's a different topic.
Right. Just to answer, ma'am, just one point over there as far as software development is concerned. So basically, the development exercise being an okay. That is a business activity.
Thank you. So next question,
Next question 10.
Yeah.
Change in method of valuation of auction. So this table is given. So how do we, turnover is calculated for futures and options?
Sir, it is a guidance note, page 17, which says that you have to take not the buying or selling amount. but we have to take the net amount taxable or to be shown for the tax. So it is not on the gross amount. You have the point. Similarly, next question also. No doubt under the 14 guidance, no, there was something was not properly considered while guiding, but now this guidance not correct this. And in both the cases, future and option, you have to take the net amount and not the gross amount of the sale or gross amount of the purchase.
So, controversy is that sales
You will be
premium.
taking the net now.
Yeah. No, controversy is only about the second table. If you see the value of premium, that's all. Difference between this old guidance and the new guidance.
No, so now this guidance not correct this.
Okay, Jayesh, next question.
Next question is question number 13 for Darshan Bhai. Yeah, yes, Darshan Bhai is question number 13.
Okay. So I think the point over here in this case study, what is it trying to highlight is, let's say if suppose year one, you in a city, okay, under 150. Third year, okay. Now there is a brought forward unabsorbed depreciation, which has two components. There is an additional depreciation, and there is a normal depreciation which was available. Now let's say there is a situation which is arising. The first year was the year in which they allowed was allowed. It is not allowed in the subsequent year. So, being in the third year, you have not that particular additional depreciation. You have your because now being in the third year, that particular option of adding it to the now what to do in this kind of a situation. So, if we go back to the provisions, provisions gives liberty. Priority to set off the business loss first, right? And then that priority has been set. But Lord never had given that particular priority was not ever been mentioned in the law. So what we can do in this case, whatever has been set off against the depreciation column in my past schedules, that is against additional depreciation. Additional depreciation, right? Carry forward the unabsorbed depreciation which is left over. Additional depreciation in my previous year.
Anything else to it? According to me, Darshan 32 1 comes first, yes, and thereafter comes 22 taken to A. So whether the assessing officer would agree to that is again a question, but it is a debatable point, and unless there is some decision according to will not get the benefit if you are claiming 22, 115. Worth trying whether this is a good idea. First to set off additional detail, whether it will be agreed by the tribunal or high court is a different question. It is only a case, as a case test.
So in this case, what will happen is, otherwise we are going to have some that too. And the priority, if we go on to the part, the law has not defined this priority.
Depreciation or additional depreciation. Only point is it defines about the priority of the business and depreciation.
Absolutely.
Right? But depreciation includes additional depreciation. It is
Absolutely.
So let's see now. This is a trying. I mean, it is a good for taste.
Clarity on this. Now moving to the next case study, there is case study number 11 for the Harish sir. This is related to the deemed dividend. So we are supposed to report the deemed dividend figure in tax audit report. So now the case study is related to this individual A, who is a managing director of the company, and he has provided his personal properties as a collateral to the bank and financial institution for the borrowing of the company to the extent of 200 crore. And against that, company has given a substantial deposit for the security deposit for giving this guarantee. Whether this giving a security deposit amount to a giving a resources of the company, and it will amount section 222E, and whether auditor is required to report the same. We seek view of Harish sir.
One thing, I mean, with all due respect to the question, if he is not holding more than 10% shares, question would not arise. We suppose here that he is holding more than 10% of the shares, and this is a business transaction. It is not loan advances. It is a deposit, security deposit. It is a business transaction, and there is a decision of the Delhi High Court in the case of was given and got some business, and this was considered as a business transaction and distinguish between the loans and advances and deposits. They said it is deposit only, it is not loans or advances. Same decision would be applicable here also. I have the case law, but unfortunately, where reported, I do not know. It dated 6940 Tarun Agarwal by the Delhi High Court. Security deposit is therefore not considered.
Citation.
Yeah, are you aware?
10% covers many or only one.
What?
10% covers only one individual or his family also.
No, individual. He should hold, yeah, registered shareholder.
Register, and it is at the year end or during the year.
Anytime during the year. Anytime.
So suppose I'm holding 10% at the beginning of the year.
No, but you had taken the loan when
At the time of taking
the loan, you were having more than 10%.
at the time of transaction.
Yeah.
Harish bhai, only question here, it may be if that is a colored transaction because he is an influential person and deposit is given probably more than market. So whether it's arm length or not, that also may arise sometime.
That is another transfer pricing. Yeah, but dividend, whether the point is because see the question is 200 crores.
Just trying to point out one play. That's all.
No, according to me, deposit is a different thing, and loans and advance is different. That is like to it. So if it is a deposit, yeah.
One more question.
Yeah.
Suppose amount is spread out during the year, then what will happen?
No, once it is given, is given. So whether you have paid or subsequently is no question. It will be considered a dignity. Yes.
Thank you, sir. Now going to the next case study. This is for the Darshan Prime, case study number 14. That is related to new tax regime or old tax regime. Settlement to the extent of 20 crore and brought forward business losses and depreciation loss of 60 crore as of 31st March 2019. As informed to us, ABC Limited has made investment in cold chain warehousing and deduction of 3580. As we know that once assessee goes to the new tax regime, all that benefits has to be forgone. So in that case, it will not that in new tax regime, all that benefit will not be available. Please refer to the working mentioned in the next page where tax working is worked out, which management is evaluating to opt for the new tax regime. With losses under 3580 will be allowed to set off, whether carry forward losses will be allowed or not, whether what will be the net difference of opting new tax regime and old tax regime. So we request the sir to just guide us on the issue.
Sure. So for the audience, what was important is over here. At times, because here we had, if you see at the starting, it says MAT credit to the extent of 20 crore. Okay, that is something which was available, and brought forward business and depreciation loss of 60 crore. Okay, that was something which was available as on March 19. Now, so this whole idea of explaining or breaking study was that if we really go to be looked into for evaluation. One was there was a brought forward losses. Second one was there is a MAT credit. Third component was the availability of 30. So based on this three component, the 35, whether I should go for an. Now, if you go to the last slide, you will have to then continue to go for the old scheme. Therefore, what is important over here to notice what was available was tax benefit, the rate benefit which is available. Ideally, when we really did the comparison, so happened that the previous calculation is something which is presented in this particular slide. Right?
Check off is done. Math reading. And then you have to decide. On the basis of 1 year, you cannot decide. That is the main point.
Case study number 12 for the Harish.
It is regarding capital right taxability. Mr. A got BA degree from Stanford University in computer science in 2015. He has developed a mobile application, MyJam, which is used by 2 lakhs user and is accepted by state government. Over the period of years, they get an idea of developing a digital tutorial platform and personalized learning experience for young students. Mr. B, partner, approved. I think it should be Mr. A here.
No, we approach Mr. A. That should
Mr.
be-
A, yeah, it's a legal typing error. Mr. A and both principally agreed in verbal terms to develop such application by incorporating AP MGAN Private Limited, where Mr. A was major shareholder. However, since both could not come to an agreement of common terms, Mr. B formed a separate entity and transferred 1180 confidential files fraudulently, which includes education content, product, design, product, and so, without knowledge of Mr. A. The matter went on investigation before economic. Investigation was transferred to Cyber Cell. Mr. A therefore approached the Honorable High Court of Constitution and retransfer of investigation from Cyber Cell to Economic Cell. Mr. A has decided to take this investigation of these personal injuries. Meanwhile, Mr. B has agreed for out-of-court settlement and pay compensation to Mr. A for following reasons as agreeable between parties. So these are the main things now. Compensation for personal injuries due to impairment of personal reputation before investor, mental agony, hardship, etc. Compensation for unfair trade practice of stealing aforesaid ideas. C is compensation for relinquishment of personal rights to sue against criminal proceedings. Now Mr. A is following queries. A, takes implication of receipt of aforesaid compensation. B, whether the amount shall be taxed to company or in individual hand, Mr. A, in his personal or business. And reporting clause in clause 16E, capital receipt and not to be amount not credited to profit loss account.
Yeah.
Question is a little long.
No problem. But the point is here, if develop that software, B but they have not transferred They said, develop by A. And therefore, what is the settlement? A decided to take it, okay. In the meanwhile, B agreed to settle out of court for compensating personal injuries and for personal reputation. So it was for the A and not for the company. And whatever was unfair trade, yes, exactly. But that is, see, it is a capital. And capitalism is never a taxable. Even in 60 was creditable to the profit and loss account. Necessary to report even. At the most, you can defer as a people. But not in the company. It will never go to company because it was never transferred. From the facts, it is clear that it was never transferred to the company. Whatever was remained with the A, no doubt, whatever.
So Harish, your point is whether we need to report it under clause.
That is, see, para 20 and 15, which says that either 20 and 15, I am reading for the benefit of all. What it says is under subclause capital receipt, if any, which are income nature, which has not been created. The tax auditor should use the professional expertise and judgment. Tax auditor may record verified judicial. According to me, there are many decisions that these are capital receipts and it should not be reported. According. Yeah.
But it's very long. That case study is for the structure. This is related to the GAR clause 30C, demerger of loss-making company and merging it with the profit-making company. I request the section to just brief and
Sure. So the case study is basically referring to there's a logistic company. Let's take as an example logistic company which has northern spread, okay, and they have been doing business over there, but they are not spreaded in central southern region. Now there is another company which is company B, which is spreaded in central and southern region. Company A is making company B has 3 divisions, which is southern division and central division. Now, what happened is, as a part of this case study, let's say the arrangement is such that company B, the central division and the southern division. Okay, company A is a profitable organization. However, company B, the demerger section, is into losses. Therefore, when this demerger is in this case study, the question is whether this can of tax benefit. So whether the objective was to take the tax benefit or the objective was beyond that. Right? That is what is being discussed or reflected in this particular case study as the facts which you have been able to see there. Now, what is important over here to understand again is what is the main purpose. So when you now, if the main purpose, if that is the main purpose is to have a commercial arrangement. Here, arrangement which can be reflected is that company A was not having presence in certain region. That is point number one. Point number two can be there or the management was not available to carry on that business, and therefore company A wanted now as an auditor, how will we be analyzing whether was commercial or whether the main purpose was to seek the tax benefit? Therefore, what can be done over here is right from the state sections was started for discussion. Of course, from there till the final resolution is passed or the final agreement is entered into. What have happened in this particular finalization of the arrangement, right? So what as an auditor we are supposed to do finally, what was the main objective? Because they could have discussed everything at that point of time. So once we extract all those information, we will be able to. Now let's say if we are able to demonstrate finally that the main purpose is benefit only, but the main purpose was a commercial arrangement. After referring to all those documentation, we are able to. Then we'll have to go to the second part, transaction. Now, generally, in a common parallels, what this tented transaction is referring to is that while I'm doing a transaction, let's say with somebody, whether I'm doing a transaction at arm's length, so all my terms and conditions which I am using part of this arrangement, whether those have I entered into any terms which would have not happened. Okay, that is what is the first criteria of, right? Second criteria is, have I misused the provision? Have I tried to take the benefit by misusing? Third thing, of course, as we spoke in the first one, is that intake perspective. If that passes through that test also, and if we are saying that it is not a tainted transaction also, then we can very clearly say that it is not an impermissible transaction, and therefore we are not required to report over it. Point number one. Point number two, which I would like to highlight here, is generally what happens as an auditor. Okay, when we finalize this audit, when it comes for the matter of assessment, scrutiny, litigation, all this documentation plays very, very important. Generally, it has been seen that at that point of time, either the client's people have changed, their team members have changed, and therefore they don't have the past data readily available in a reply. Therefore, it is important that currently, when we have been doing an audit, we are part of our documentation so that tomorrow, when we establish this before the tax office, we are able to do that. So that with that objective, this transaction has to be looked into. To summarize, point A, number one, from the day when this initiation of discussion started for this arrangement till the final conclusion happened, whether we were able to prove that it is a commercial substance which is more important objective, and tax is just an ancillary part of it, which we should be able to prove. This documentation as part of our audit document, because that will
I agree what that is. My only one apprehension, Harish bhai, is that see this B is a subsidiary company. See, they are related parties.
Yes.
Now, commercial transaction, if I am taking over some other outside business where I do not have presence. You know, say Kotak Bank is taking over other Vaisya Bank because they didn't have presence in the south and all that. Then it's a different thing that I want to spread it. But here through subsidiary, I am already doing it.
No,
So
subsidiary you are doing it, but then you are, I mean, there is no we have presence in the particular area. So subsidiary is not developed to that extent, and therefore they could not do it, and therefore they have incurred a losses. That is what from the facts is. And why you are taking not only for to avoid the tax. The question is that I am taking the loss net. And that is why I am taking. And therefore, otherwise also what earlier I had said. And therefore, according to me, the commercial transaction, you have the reasonable documentation substance, and therefore there is no question.
So, sir, at least to conclude, all these requires a lot of subjectivity, and honestly, as an auditor, will not able to conclude that it is an impermissible arrangement.
No, that is what our guidance also says. Then don't say it is impermissible transaction unless it is. Right? So we should follow the guidance, no? Because it is a saver in our hand, at least. You know.
So now coming to the last questions, which is grouped under miscellaneous questions, I request
Question number 4 is given.
yeah, then sorry. No, I think 4th is So then question number 4. Sorry, my apologies.
Question number 4 is basically, let's say A and B Limited. AB Limited is CD Limited is owned by wives of A, which is basically C and D. Sorry. Yeah, right. So AB Limited has huge amount of I will add something over. The point can be that whether as a transaction from when the money is transferred by AB to CD, okay, whether it will lead to a deemed dividend. The reason is because AB Limited and CD Limited has different shareholders, and it's not the registered shareholder. So both are having different shareholders, right? But let's consider a situation where AB also a shareholder of CD Limited. Okay. In that particular case, when the funds are transferred from AB Limited to CD Limited, okay, and CD Limited is used then in that particular case, whether it will lead to a deemed dividend, the answer is no, because there are series of cases which have said that in case you are you can very well be out of the. Now the question, what as an auditor we are supposed to or the business or the funds are extracted or removed or withdrawn from CD Limited by the promoters. Because as an auditor of AB Limited, we might CD Limited. Normally, we would have not seen the transaction from the CD Limited point of view. But GAR is asking us to look it from that point of view. What has happened with that funds? Whether that funds is withdrawn personally or whether the funds are used. Why this case study is selected? Because normally when we look from the active, we only see whether deemed dividend is applicable from our side. Okay. We also need to see what is the utilization of this fund, whether CD Limited has or they have withdrawn it as a promoter has withdrawn it. Because if they have withdrawn it, then of course we need to look from the over. I think that's the objective of this case.
No, it is very clear that it was only a business. That is the main point. Had it been, then you have to put that it is a business.
No, I think we are done with. I think miscellaneous.
Yeah.
So, I don't know. So the miscellaneous is basically importance of the clauses. Now, generally, clause number 10, when we see business name. So what happens is generally, as a part of practice, a lot of things gets carried forward from the previous year as a copy paste, right? But then because the nature of business now becomes very important because it is interlinked as a part of the overall version. When we see the perspective, the overall version becomes very important. Therefore, it is important to look into the nature of business. Or business nexus, if it is not defined in the nature, there is one default which will be reflected because the auditor has presented in his report that this is also one of the business, right? So let's say intercorporate deposit or any business transaction where I'm giving a loan to the other company. Certifying that it is also this particular business, bringing this to the notice. Partnerships and LLPs, where now if there is a change in the profit sharing ratio, as we all are aware of, it will result into reconstitution of the business. So therefore, it is important that we look from this perspective. Earlier was the place when it was always copy paste, right? But then it is important to look from that perspective because if there is a change in the profit sharing ratio, that will lead to a reconstitution of the business and capital gain. Yes, from the reconstitution. Because the profit sharing ratio, if gets changed, then that results into a reconstitution of the business. And therefore, it form is going on. Right? The last one is right. So advance money forfeited. Now this example says that if there are personal assets, okay, and that results into an implication. Now whether that is required to be reported or not as a tax auditor. So I think the guidelines note is saying very clear that only the business transaction. If he is still having a transaction of personal nature which is attracting 56 to 10, still that is not required to be reported as per the guidelines.
That transaction, yes.
Yes. But if he is falling under,
Yeah, otherwise there is no question.
no, I'm saying in case if it's a personal transaction, then that is not
No,
required.
even business is doing and personal transaction
Not required. Absolutely.
So we have few questions we can take from the floor. Any member, if has any question, he can just ask us briefly. Can take few questions.
In case of reporting under section 269 SST,
Can you just
it,
stand up?
Please stand up.
Yeah. If interest is credited and it's not paid, whether it will be a transaction without the journal entry or it will be a.
It is not a cash transaction.
It is not a cash transaction,
Yes.
only it is credited,
Yes.
but no payment is cross-pay check, so that is not involved.
No, the question. Yeah, if it is more than 20,000, you.
Interest is credited and all.
Yeah.
So his question is whether it will amount to otherwise than in cash.
No. I think if you go and report that transaction, in fact, you will have a problem.
Verified by the guide.
If you go and report that particular transaction, you will have a problem of. But ideally, this transaction is not because of the interest you pass in a check.
One item of contingent liability in that CCB report. Very problem is that if there is a books of account, I have not debited the contingent liability, but I have notes I'm writing is a contingent liability. Will it come out into 370?
No.
Not required.
If you have debited only
Then
then.
only.
Then only it's. But generally, I don't know why this was raised. Contingent
we-
liability, we never reported the profit and loss account. It is always shown in the notes.
Notes, yeah.
But anyway, this is drafted by the CBDT.
Just
AD or ADA.
AD for a specified business. In presumptive taxation, the situation arises if I have a turnover up to 2 crore. I am duty bound to report the profit of 6% or 8%, depend the case, as the case may be. But moment I exceed the limit of say 2 crore 10 lakh, there is no restriction on me to report a specified percentage. Up to 10 crore, I am not duty bound to report
That
any
is under
specified
44.
percentage.
That
Yeah.
is under 44.
4480, I am not required to undergo tax audit and I am not duty bound to
But here,
report even specified percentage.
here you want to take the advantage of what have the limit of 2 crore. Once you exceed the limit, that is not available to you. You have to see or get it out.
So in that case, it gives a real peculiar situation. Person who is having a turnover less are taxed at a higher rate, and moment because they are duty bound to report 6% or 8%.
It is optional. It is optional.
It doesn't want to undergo tax audit.
Ah.
Yes, you can
No
report.
question. So there is no discrimination. What you are saying.
Yeah.
There is no discrimination.
So just for the information.
No, sir, related question is that suppose if my turnover is less than 2 crore rupees, 1 crore rupees, I want to show loss. So I have to get my accounts audited.
Yes.
Now next year, am I supposed to deduct tax? Whether TDS provision, because in individual and HUF, the thing is if you are liable for tax audit, then next year TDS provisions will be applicable.
Now it is 1 crore. That tax audit limit is not there. It is 1 crore. Yeah, that is 194. It is changed. Yeah. So there is no question.
Again, it says that if under 4480, if I do not have the income above minimum exemption limit and a minimum taxable limit. So in case of individual, I have a turnover of less than 2 crore, but I am in loss and my gross income doesn't exceed 2.5 lakh. So I'm not required to undergo the tax audit. Whether that interpretation is correct or whether we need to undergo the tax audit. No. Minimum.
Partnership firm, if the partnership firm is incurring loss, or it is required.
No, when your turnover is what?
Turnover is 20 lakh, 30 lakhs. But the partnership, it is a partnership firm and it is incurring for tax audit.
Our question is, it is a 30 lakhs turnover, 4480 is applicable. I am not reporting wrong.
4480 or 4480? EDA.
Or AD. whatever.
And
If
present
it's below, you don't declare 8%.
You don't declare. Then you have to-
There is a loss, na? That's what she
Then
said.
there is a
Then
loss.
it is a mandatory. Yes. You want to claim the loss. Yes.
I don't want to claim the loss also.
Then forget it.
No, but 8% to she will have to
Then
zero. She says zero. I want to declare.
My I mean, it is a loss. I don't want to claim the loss. Then in that case, whether the
But zero income or 8%
firm.
Zero income or 8% income.
It is a partnership firm, zero income.
Zero income you will
Means loss it is actually, and no other income is there.
Have to report because you will have to do.
Yes,
Because if you don't do it, then again there will be a separate notice which will be coming up.
4484.
4484. No, so legally, okay, let's go to that.
Even loss form also, unless the previous year you opted for 4480, then you will get your account. Otherwise,
Right, but what happens is if you don't report it as a absolutely, absolutely.
they are not going to get your tax audit.
No, if we don't get a tax audit, that's a point number one. But if we
Not
don't,
required, because 4484 also says specifically.
but what happens is still we receive the notices if we are showing losses. Because if
that is the department's fault.
Absolutely.
Only
Absolutely.
here it is.
So
what-
practically what happens is if you don't do an audit and if you find with a turnover of 30 lakhs, you receive
Maximum marginal income is below tax.
Below eligible, so I was not getting audit.
And 4 also says, yes, if you opted for 4480, then.
so audit is not required. Point number one is that. But if we don't if we don't do an audit and if we file a loss return with a turnover of 30-40 lakh of rupees, then at least I have seen that people have received the
Individual proprietor. Proprietary, my other income is.
In fact, I have come across a situation where there was a and where in the derivative loss they have received them.
No, that is okay, but the law is there. That's a law you have to see.
Yeah.
The law will say that if you have a taxable income, then fine. Otherwise, forget it.
Absolutely.
Otherwise, you are entitled to claim the loss according to me without audit.
Right. I appreciate that particular point. In fact, that has been a but problem what arises is the notice. So whether because I have come across a situation where these notices have been received where there is a loss.
No, but in that case, sir, if you are going to tax audit, what clause you have to write in your tax audit? What clause? Because if the clause not applicable, you cannot.
Agree. I agree to what you are saying, which is a fact. But the problem is about the notices which we receive for the smaller. Absolutely. Absolutely.
Sir, I have one question. Last year I filed one tax audit report and there was 43 million GST payment was left at that time when I filed the tax audit report. So I disallowed that GST amount and I filed the tax audit report. But before filing of return of income, the person has paid the GST now.
You can revise.
You can revise.
You can revise. That is what.
So do I need to revise or I just
you
need
need
to
to
come?
revise.
Otherwise, 143, one again the problem.
Yeah, I'm getting that notice there because there's a difference.
Unless you revise the tax audit.
So now can I revise that tax audit, last year's tax audit? report?
Yeah, you can, there is
Okay.
no limit. That is
Okay.
for income tax filing.
Okay, so tax audit I can revise now. So
Two later you revise.
In fact, now that's the solution.
Oh.
That's the solution.
okay.
Because tax audit is important. That means automatically processing and who can.
Yes.
There is no question of
True.
having a revised audit report also. According.
That will unnecessary.
Again the CPA.
CPC, is it?
Who is going to listen to that?
Hospital will not
Just
understand.
cannot, because of CPC issues only, you cannot revise the audit. I mean, there is no need for it to have a revised report.
What else to do?
Yeah, so otherwise you can go for appeal. That's the
Fine,
Will not be open. Appeal only.
because what result would you give in a revised audit report?
No, they permanently
No,
made.
just because somebody accepted after that final audit report, but you did not sign.
Says, that is what.
That is the option available. That is up to you. Whether you want to do it, you can do it. Otherwise, go for appeal. That is the only solution. So thank you very much. We have a session. I request convener to take over the session. We have completed before time. That is on time.
Not before time.
Exact time. So we have exhausted all the available time. Thank you. Thank you, Karan.
Harish by Motiwala, Shri Darshak by Shah, and the moderator C. Jayesh by Shah, and the co-moderator C. Atul by Mathuria. In the absence of our Central Council member C. Chandrasekhar Chitlesa, for having this kind of wonderful session and wonderful panel discussion. So before thanks, again there are few announcements. As we discussed earlier, our institute is going to conduct the by-elections on 16th and 17th of September. So we request all the members to please cast your vote and give the preferences to all the candidates. There are 5 candidates. As we all know, in the month of November, our institute, or rather India, is going to host a global event, that is the World Congress of Accountants in the 2022. So it is on the 18th, 19th, 20th and 21st of November 2022. It is at the Geo World PKC. And it's a lifetime event, so we request all the members. And again, the institute has started a new discount scheme. So wherein the good discounts they are allowing us, our members, so that maximum members can take the benefit of this global event. Because of this workout event, the institute is going to impose certain restrictions on the whatever study circles events we are having every month. So between 15th of September till 30th of November, there will be restrictions from the institute so that they will not allow us to have any events, but they have assured that the post this event in the December, subsequent to December onwards, all the events which we couldn't do because of this subsequent period. So that will announce and will circulate it through the messages over the WhatsApp. Now, events which we had a plan post 15th of September this month, so which we will not be able to do post 15th. So we are preponing it before 15th. So next week on Tuesday and Wednesday, we are having the 2 virtual sessions. Otherwise, we'll have to wait till December. So next week, Tuesday and Wednesday evening, Tuesday we are having, it is on the 194 hour. TDS on the perquisites on the business and the profession. So we'll keep 2 hour sessions on 194 hour, and on Wednesday. So CA Jayesh Bhai Gogri, who couldn't finish all the amendments in his last session, so he will continue on the Wednesday and he will try to finish the recent changes. Evening only we'll keep 4 to. So either we keep it under more. Oh, we can yes, we can keep after 6 hours. Okay, so we'll keep the time of the later evening part only, so that all the members can attend. 194 hour may we approach 2-3 speakers because of the short of time. Our own regional council member CA Pinky Kedia, she is trying to take these sessions, and we'll be having a good session on 194 hour. Okay. Now let's move towards the formal vote of thanks. So before we cast the formal vote of thanks, I would like to state, see, history has a tendency of repetition. And today, we at a JP Nagar CP Study Circle, we are repeating the history. History may be of the pandemics, history may be of the economic crisis, but the history what we are talking about today, it is of see Harish bhai Motiwala, right? So, sir, if we are recollecting our history, when the JP Nagar CPA Study Circle was inaugurated, the first session was of CA Harish bhai Motiwala, and he gave the lecture on the income tax in our first session. So today we will.
In fact, I was first inaugurator of the JB Study Circle. No. So I have a great respect and love for this study circle. So that is why, because I have started, I could take the credit that I had inaugurated.
That is why he has grown so much.
Your blessing.
So, sir, we are with now a new generation. So, if you can just share your, sir, for this generation to our members, we would like to give the mic to our senior most member. If you can share his few words for, can share your experience, sir.
I always found this study circle is very. In fact, I would give credit conveners also, because they are taking great efforts to do this. And that is why you were eligible to get study circle award continuously for 17 years, which shows that this study circle is active and members are taking very good participation. I mean, take the interesting topic, members are bound. All the best to this study circle.
So we hope this history will again repeat somewhere in near future. So we are looking forward, sir, your valuable time again on a good topic, some good topic. So with the senior member like
Yes, I'll be there. Because
thank you very much.
Until my health will permit, I'll be there. If my health doesn't permit, then that is a different question. But today also I am active, and by the grace of God, I want to remain active and till end.
So again, we'll repeat the same question in the near future. So with these senior members today, we had CCM Chidle sir, CA Harish bhai Motiwal sir. So third panelist, CA Darshak bhai Shah. See, his contribution in today's session was like the finalizing the case studies was the challenging task. And truly speaking, the way the efforts have been put in by the CA Darshak bhai Shah, we are really thankful Darshak bhai for having this wonderful case studies. Otherwise, this panel discussion was a little bit difficult. So thank you, Darshak bhai. So with these panelists, we had two moderators, CA our own past convener, CA Jayesh bhai Shah and CA Atul bhai Mathur, our core group. The flow was, the panel discussion was very good, and the sequence of case studies taken by them was also very in a nice manner. So thank you very much. And now to cast the formal vote of thanks, I would like to invite our deputy commissioner.
I'll take just 1 second to give credit to
give the credit to they have spent good amount of time in all the case studies. So the whole credit goes to them.
Yeah. So I would like to invite our deputy commissioner, CA Purvi Bhagirechi, to cast the formal vote of thanks.
For this wonderful session on tax audit in the tax season, I would like to propose a very hearty vote of thanks to our today's panelists, CA Harish bhai Motiwala, CA Darshak Shah, and in absentia, our CCM, CA Chandrasekhar ji and Chitra. And we thank you all for all your valuable time that you put in preparation of the panel discussion, in having the panel discussion, and also taking up all the queries of all our participants here. I would like to thank our coordinators, the moderators for the event, C. Jayesh Shah and Sri Atul Mansuria. Of course, a big thank you to all the participants for sparing the valuable time on this Sunday morning. That too in a tax season when either they are working or they are with their families, they take their time to come here and attend the sessions. A big thank you to all of you. Thank you.